I just closed a Boeing BA trade iron condor. I don't trade a lot of iron condors. You win a lot of them, but if you hold them, it takes 2 to 3 winners to make up every loss. And yes, they're high percentage, but I like strangles better. The win percentage is better. The profitability is better. There is more risk, but overall, I prefer a strangle to an iron condor. However, when the VIX is really high, then I will jump into some iron condors just because the risk reward isn't too bad, and you're playing that drop in the VIX. And I didn't actually record where the VIX was when I entered this trade. This is the weekly chart right here, but I believe the VIX was trading at around 25, between 25, 25.50. I entered 3 iron condors. BA was one of them. I closed it today before the Fed meeting, and also because it hit my target, to be honest. But I was going to try to get out of it the day before the Fed anyway. The VIX is down to like 20.75 now, which you can see over here. This is the weekly chart for Boeing. I'm showing it because it's kind of the process I go through. For this particular trade, I really wasn't concerned about where the trading was, where support and resistance was, because again, this was a VIX iron condor play. So really, all I was cared about was the fact that the VIX was high. I've got some weekly trend lines drawn here. I typically draw my trend lines on the weekly chart. I prefer that. Put a very simple fib levels here, the 61 and the 78. When I actually, on my trading charts, I'll use more fib lines, but it's just a lot cleaner if I just show these on these type of reviews. We're going to take a look next at the daily charts I was looking at. You can see that I sold the 230 call and bought the 235, and I sold the 165 put and bought the 160. So I had a lot of range on the weekly chart. But let's take a look at what it looked like on the daily charts. Again, I'm showing this just because it's part of the overall process I go through, but it really wasn't that important. These charts really were not that important to me on this trade because it was strictly a VIX trade. But you can see I entered right here on this candle. I think Boeing was trading at about 199 when I entered. It bounced up and down here. My plan was, because I knew the market was very volatile, I had a level set around 190 and a level set around 220. And if those levels broke before the Fed meeting, my plan was just to close this trade for whatever gain or loss I had in it. I wasn't anxious to really hold on to it and try to fight it past that. You could, really, if you're just looking at these charts, you could argue that it should be bouncing because it's at these lower extreme Bollinger Bands. Same here, it had moved away from the wave right here and should move back up into it, and it was at this level here on the Keltner channels. Moving averages really weren't giving me a lot. This chart, all it really tells me is that I've got support coming up here, and everything else is showing me that this stock may be going down. Even the 50 is starting to curve down. So if I were doing a directional play, I probably would have been waiting for the bounce back up and then to sell it short here if I wanted to do that. But that wasn't the trade I was doing. I was doing this iron condor. And I'll go ahead and show you the actual trade sheet on it. Again, I didn't put the, this says implied volatility, but on these trades it would actually have been the VIX that I was tracking. And I believe it was like 25.50, and then I closed the day at 20.75. I didn't write them on here. It's just a little sloppy on my part, not completing my trading sheets. But you can see I entered it, took 5 contracts. I got a really, really bad entry. I got an 83-cent credit. That is awful on this trade. I should have gotten $1.20 to $1.50 on this trade, at least $1, but probably more like $1.20 to $1.30 is where I typically would trade this iron condor. I was having trouble because of the spread getting into it as an iron condor, so I tried to get into it as a call spread and a put spread, and I didn't manage it well enough, and I got a terrible entry. I really thought about just trying to put a close in for 80 cents or 75 cents and just get out of this trade and walk away if I could. But I went in and put in a 50% target, which is typical what I do on an iron condor. And it hit today. My plan was to close it today anyway, but it hit today. I got an 8% profit on my risk. And because it was in 7 days, that's a 420% annualized. It worked out fine. Terrible entry. I do not get into these for 83 cents on these 5-point wide ones. That's awful. But sometimes even I make mistakes. I'm not paying attention, and want to try, especially when you're trying to leg into one. If you get a bad fill on one side and then you get a bad fill on the other side, it's really difficult. If you can enter into them as the iron condor, then of course you know what you're going to get. So that would probably be what I would recommend for most of you. I do have good luck legging into them, but this particular trade, I screwed that up. But overall, it's a good trade. If you have any questions or comments, put them below. Please like the video and subscribe to the channel. Thanks.